Let's learn through an example. What is spin-off investing? If you have gone through Warren Buffett's early partnership letters, you would find that he had split his partnership portfolio into 3 categories, and one of the most important category was workouts. Now what are workouts? Here is from the man himself. These are securities whose financial results depend on corporate actions rather than supply and demand factors created by buyers and sellers of securities. In other words, they are securities with a timetable where we can bet it with reasonable error limits, when we will get how much and what might upset the apple cart. Corporate events such as mergers, liquidations, reorganization, spin-offs lead to workout companies. If you want to learn how to invest in workouts, it's also called as special situation investing or risk arbitrage investing. The best book to pick up is Joel Greenblatt's You Can Be a Stock Market Genius. In this post we will learn about spin-off investing through an old example. First, understand what is spin-offs. It's an area of discarded corporate refuse, usually referred to as spin-offs. Spin-offs can take many forms, but the end result is usually the same. A corporation takes a subsidiary division or part of its business and separates it from the parent company by creating a new independent freestanding company. In most cases, shares of the new spin-off company are distributed or sold to the parent company's existing shareholders. There are plenty of reasons why a company might choose to unload or otherwise separate itself from the fortunes of the business to be spun off. You can make a pile of money investing in spin-offs. The facts are overwhelming. Stocks of spin-off companies and even shares of parent companies that do the spinning off significantly and consistently outperform the market averages. There are various reasons corporations opt for spin-off. Firstly, business may be separated via a spin-off transaction so that a separate business can be better appreciated by the market. Secondly, sometimes the motivation for a spin-off comes from a desire to separate out a bad business so that an unfettered good business can show through to investors. Thirdly, sometimes a spin-off is a way to get value to shareholders for a business that can't easily be sold. Fourthly, tax consideration can also influence a decision to pursue a spin-off instead of an outright sale. Finally, a spin-off may solve a strategic antitrust or regulatory issue, paving the way for other transactions or objectives. Reading the scheme of amalgamation shared by the company in their regular regulatory filings to stock exchanges would spell out reasons for spin-off. Let's introduce a case study here. In 2015, Transport Corporation of India informed its shareholders that the board of directors of the company has its meetings held on the 8th of October 2015. Has approved the scheme of arrangement between TCI and its wholly owned subsidiary TCI Express Limited. If one seeks to understand the rationale of this enough, often they can read the scheme of arrangement available on their website. You can look at the following screenshot which outlines the section for your reference. Clearly, the management's objectives here is to attract better valuation for their own entity, which is growing with tailwinds from the boom in e-commerce space in India. Joel Greenblatt also pointed out that there are 3 reasons for success of spin-off investing operations. Number 1, institutions don't want it and their reasons don't involve the investment merits. The institution don't want it because many times a carved-out entity is a small cap and fund managers may now have mandate to invest in small cap companies. Number 2, insiders want this transaction. This is the most important item to track in any spin-off. If the management is not gung-ho and are keeping or building their interest, then as minority shareholder you should be very interested. As an example, notice the significant event for TCI Limited prior to the announcement of merger. A significant portion of the outstanding options were exercised by insiders and were converted into equity shares. Number 3, and the most important reason, is a previous hidden investment opportunity is created or revealed. A spin-off could result in a bargain or creation of a previously hidden great business. Applying some common sense and some school-grade maths may give you a decent heads up your portfolio. Let's look at the example of TCI Limited. The existing shareholders of the company would be given 1 equity share of the new company for every 2 share of the parent company held by them. If you look at the operating performance of the units, which is also presented in the scheme of arrangement, you will get a glimpse on how those 2 entities would look like. The spin-off is an asset-light, better ROA business. This is in line with management rationale. The new business would attract different set of investors and would have better price discovery. TCI has some history of spinning off companies, like in 2011 it spun off its real estate arm and investment operations. In that spin-off, investors made handsome returns for the existing shareholders. I have taken some snapshot from a Catalyst Wealth website which can be seen below, where how the spin-off opportunity gave a 50% absolute return in 6 months. Now would history repeat? Will the existing shareholders make such returns this time around as well? Now earlier I was talking about using some old school level maths and common sense. The current market cap of TCI is 2,300 crore Indian rupees at its split. The split market cap for TCI Express and the rest of TCI would be 767 crore versus 1150 crores. This is very steeply priced. In 2014, an ICICI Security Research pointed out that a fair value price of both companies would be approximately between 99 rupees to 137. There is no margin of safety for TCI Express. In this situation, the prudent step would have been to not participate in spin-off. An aggressive would look at a couple of peers they are richly valued, although brand-wise and margin-wise they are ahead of the TCI and may take the bet. If the market value of TCI Express becomes like its where then it could become interesting. In the end, in 2016, fundamentals won and the spin-off didn't make money. However, since more desirable and profitable company was spun off, the company has given fantastic returns in last 8 years. This post is not a recommendation to buy TCI Limited or participate in any of this spin-off situation. Understand why companies are doing spin-offs. To read full blog, go to the link in description.